Hi everyone, this is John from the Abada Solutions team, and this is the third video in our series explaining how to produce a fixed asset depreciation schedule using Alteryx. To begin, open the workflow that we had previously created. If you remember, we left off answering question 1, showing all of the duplicate data and pulling it out. Now, we're going to begin to answer question 2. First, add another input data tool onto the canvas. Again, navigate to the drop-down, go to File, select File, and once again we are going to choose the same depreciation dataset Excel sheet to pull in additional data into our workflow. Instead of the Fed depreciation table, we're going to choose the depreciation table HY this time. Again, you can see the configuration window, it fills up. Next, we'll navigate to the preparation bar or the preparation tools and choose another select tool. We're just looking at the data here just to know what it is. The formats all look good, so we don't need to do anything with this tool at this time. We're going to drag another select tool, and we're going to connect it to the left anchor of the previous join tool that we created in problem set 1. Again, just to see the types of data. And if you remember this join, the left is all the unique values, which were not duplicated. Now, we're going to drag an additional join tool onto the workflow. We're going to combine these two data sets. We're going to do this based on the depreciation method and based on the based on the estimated life. This will help map our depreciation percentages to our assets in our problem set. So if you want to go ahead and run the workflow, you can see that we began with 2,755 records, and after the join, we ended up with 24,005 records. What we just did here was effectively what we did in the Excel introductory example in video 1. We took an asset, which we got one tax year, and we produced a row for each tax year in that asset's estimated life. So for a 5-year asset, we produced 6 rows. For a 7-year asset, we produced 8. For a 9, we produced 10, and so on and so forth, which is why we have so many extra rows in our newly created table. Now we want to create additional columns for this data set that we have produced, so that way we can get extra insight. So we'll go back to the preparation tools and drag another formula tool onto the canvas. And my apologies, actually we want to go back to the join tool and uncheck the right depreciation method and right estimated life. It's just going to add confusion if we have that on there. So if we can just remove that now, it'll remove that from our data set. So we're going to go back to our formula tool. We're going to add a column. We're going to name this one tax year 2 because our current data set only shows tax year as 2016 or 2017. We're going to choose data type double so it can be treated as a number and we can do mathematical calculations on it. And now we want to take the tax years that we have and then turn them into the actual tax year that it'll be. If you remember, like I said, we only start with 2016 or 2017. And that would be recovery period 1, because that'll be the first year the asset is owned. But we've now calculated the depreciation percentages for every year in the tax year's life. So we need to change those tax years to match the recovery period year. So we're going to use an if-then statement. If the recovery period equals 1, then date time year, which just basically tells you that, or which tells Alteryx the type of data we're using, which means it's a date type of data format. And we're going to use in-service date. So it'll equal the first year in which the asset was put in service. Else, which means if the recovery period is greater than 1. We're again going to use date time year to tell Alteryx that we're dealing with a date here. And this time, inside of the parentheses, we're going to put in-service date. But we are also going to add, my apologies, we're going to add the recovery period. So -1, because we know the first recovery period is the initial year, so we need to subtract that out. So if it's recovery period 2 for an asset that was put into service in 2016, now our tax year 2 will say 2017 for it. If it is recovery period 3, it'll say 2018, etc. And so we're going to use an end if here to say that this formula is completed. And just to show you how it works, if we run the workflow and click the right anchor tool, you can look and we scroll to the right column here where our new column is created, and you'll see these tax years now have 2014, 15, 16, 18, 21, way more years, where if we go back and look at the initial tax year, it was only 2016 and 2017 that they provided us with. Now, if I navigate back to my Excel sheet, you can see that we had also calculated current year depreciation, which is equal to the acquired value multiplied by the depreciation percentage. So we'll drag another formula tool onto the canvas so that we can recreate that in Alteryx. Again, we'll add a column, and we're going to name it current year depreciation. I use the abbreviation, but you can use the full name, whatever you're comfortable with here. Again, we're going to change it to a double so that way it is treated as a number, and we can use mathematical formulas on it. We're going to use acquired value times depreciation percentage. The workflow here just to show you what happens if we look in the result window and we scroll all the way to the right. We have a new column, current year depreciation, and this is the current year depreciation for each tax year for each individual asset. Next, we're going to calculate the accumulated depreciation. So navigate to the toolbar and go to the transform tools and choose the running total tool. The running total tool is inclusive of the most recent year for the data that you're pulling. Here, we're going to group by the new asset ID, which we created earlier in an earlier video, and we're going to create a running total of the current year depreciation. As we know, accumulated depreciation is equal to all of the current year depreciation for each year added together. Once we have this, though, this will give us the end of year accumulated depreciation, but we still want to calculate the beginning year accumulated depreciation so that we have it. It's not necessary, but we like to have all information regarding the asset for a particular year in one row. So we're going to drag a formula tool. We're going to add another new column. We're going to name it accum depreciation. If you would like, here you could name it beginning of year accumulated depreciation. If not, we can rename it later. This time it is going to be equal to the running total cumulative depreciation minus current year depreciation. Again, we're going to change the data type to double so we can do mathematical equations on it. Now I'm going to run the workflow again just to show you, and then if we go click the output anchor tool, we can look and scroll all the way to the right here, and accumulated depreciation is equal to 0. Which we'd expect because no beginning of year accumulated depreciation had occurred as we just acquired and placed the asset into service. Again, we check for another asset, entity 1, asset 10, and again, in the first year, accumulated depreciation is equal to 0, which is what we would expect because there cannot be any beginning of year accumulated depreciation on a newly purchased asset. Now this time we're going to drag another formula tool onto the canvas because we want to calculate the end of year tax basis. So we're going to choose select a column, we're going to add a column, we're going to title it end of year tax basis. This time the formula is going to be equal to the acquired value of the asset minus the accumulated depreciation, which we just calculated in the last formula, minus the current year's depreciation, because the end of year tax basis would both count, since the accumulated depreciation, as previously mentioned, was the beginning of years. Again, we'll change the data type to a number, or to double, so it is treated as a number. Now we'll drag another formula tool onto the canvas, because this time we're going to calculate the beginning of year tax basis. Again, it's not really needed to calculate this. You could look at the row above to figure out the beginning year tax basis as it's the previous year's end, but I like to have it all in one row as I find it easier to deal with. So we'll change the data type to a double. We'll use this beginning of year tax basis will be equal to the acquired value minus the accumulated depreciation, and that's it. We don't subtract the current year's depreciation because that hasn't occurred yet for the beginning of year tax basis. We have now created all of the columns needed for our depreciation schedule. We're going to work on cleaning up this data set and pushing it out to Excel. So we'll drag a select tool onto the canvas to do some cleaning up because there's some extra columns that we don't need. This will allow us to rename some columns as well, so that way this final data brick that we can push out is as useful and as organized as possible. To start with, we don't need the tax year that they initially gave us because it's incorrect. because it only shows 2016 or 2017 when we now know that there's additional tax years. So we're going to uncheck that box, and we're going to go down to tax year 2, and we're going to go under rename, and we're just going to rename that tax year. So this way, the initial incorrect tax year that they had provided us will no longer show up in the table, and our newly created tax year 2 will show up. We're also going to uncheck asset ID. If you remember, we created new asset ID in our previous video. So we're going to retitle that asset ID. This new asset ID includes the entity number and the asset number combined, so that way we can really see, to confirm there's no duplicates, and really see where the asset is owned and where it is. I'm going to drag that higher up just to organize where it is. The top rows in the chart you're looking at become the leftmost columns in an Excel file. And so I'm just organizing it the way I like it to be organized. You can reorganize it however works best for you. Next, I'm going to take depreciation percentage, and I'm just going to do a rename here as well, just to get rid of the underscore. This is, again, just a personal choice about the way I like it to appear. You don't have to do it this way. There's no right or wrong, as long as it's clear to you and your reader what the column is signaling. We're going to go down to the running total, current year depreciation, and again, as previously mentioned, this is equal to the end of year accumulated depreciation, because the running total column in Alteryx is inclusive of the last data set in that running total. So if you have 3 numbers, the running total, or 3 rows, the running total is going to count the total of row 1, 2, and 3. We'll then go down to accumulated depreciation and rename that beginning of year accumulated depreciation, just so it's clear. Again, I'm just going to be reorganizing some columns here. For me, it's easier to follow my head by formatting it in a specific way, by having it go beginning of year tax basis, beginning of year accumulated depreciation, current year depreciation, end of year accumulated depreciation, and end of year tax base. I can sort of in my head follow the math that takes you from the beginning of your tax basis to the end of your tax basis a little better. But again, you can organize it however you want. Now that we have this chart, we want to push it out into an Excel file. You can see that we already have pushed it out once to answer question 1. We're going to push it out a second time by going back up to the toolbar, going to the in-out tools, and selecting the output data tool. We'll connect that to the select tool. We're going to navigate and choose an Excel file to write this to. I'm again going to write this to my test file, but you should be writing this to the Excel file created in the output folder already. I'm going to specify a sheet. I'm going to name this one question 2 and choose OK. Again, I'm going to choose to overwrite the sheet. That way, every time I run the workflow, I can be sure that the data in my Excel sheet is the proper data from the specific workflow run. I'm now going to go to the top right and search block until done. Sometimes Alteryx has issues when you try to write to the same Excel file twice in a single workflow. The block until done tool will prevent it from writing until all previous tools have been operated. So I'm going to add that before both of my output data tools, just to avoid any errors or technical glitches when we run this workflow that prevent it from properly running to the Excel file. Now you can go ahead and run your workflow. I'm going to minimize and show you the Excel sheet that we have created. You can see test Excel, which we created in a previous video, is still here, but now there's both questions 1 and questions 2, which have been created in it. If we go back, you can see question 1, which again, this is all of our duplicate datas. So these are asset IDs which appeared twice in the initial data set provided to us. As you can see, you can now format it into a table, resize it, and whatever you need. Now going back, here is question 2. This is every unique asset provided to us in the initial data by the CFO. I'm going to turn it into a table and do some resizing here. And now we have every tax year for each of those assets. So from the in-service date until the end of their estimated life, we have every single tax row. If we look at one asset, you can see one asset here has a 7-year estimated life, and we created 8 rows of data from 1991 to 1998, providing the beginning of your tax basis, beginning of your accum, and all of these other calculations that we had done in the introductory data in Excel, but now we did it using Alteryx for thousands of rows at once. And we can reuse it for any future data sets that were provided. Be sure to check back for our next video where we solve the remaining problems. Thank you, and have a great day.